When Bitcoin launched in 2009, its developer, Satoshi, envisioned that there would be 21 million coins, which now forms the total expected supply of Bitcoin. These coins were to be gradually released until February 2140 via mining on the network. The rationale for pegging Bitcoin to a fixed supply was to create a mechanism to consistently drive the price of Bitcoin. However, as Bitcoin gained more popularity, there was a surge in the number of miners, leading to the faster-than-anticipated mining of Bitcoin. On Monday, December 13th, Bitcoin reached a milestone. At the time of writing, 90% of Bitcoin's cap supply of 21 million coins has already been mined. Bitcoin now has a total supply of 18,899,675 Bitcoin. The first being Bitcoin mined on January 9, 2009. It has taken Bitcoin miners 1 month short of 13 years to mine 90% of the asset's total supply. When all of the Bitcoins have eventually been mined, miners will depend on fees from the transactions occurring on the cryptocurrencies network for revenue. Validating the scarcity theory, when only 10% of the supply had been mined in early 2010, the price of Bitcoin was at $0.10. However, when 50% of Bitcoin's total supply had been mined, it hovered over $7.50. Now, Bitcoin is trading at the $48.6 thousand mark at the time of writing. We are still very early. Although "we're still early" has become a meme, it is most likely true. Only a tiny subset of society understands what Bitcoin is and its potential for empowering regular citizens. People living in privileged communities that enjoy high levels of freedom and individual rights can be quick to dismiss Bitcoin. However, the P2P cash system can also empower them. Bitcoin is most often a different thing for different people. For instance, it might function as a store of value for someone living in the US or the UK, where inflation isn't soaring but still erodes purchasing power over the years. On the other hand, for someone living in Palestine or Cuba, where war and totalitarianism are commonplace, Bitcoin might be their only hope of finding financial freedom. The broad use cases for Bitcoin around the world demonstrate its versatility and the many ways it can benefit different people in different ways. Still, most people haven't yet realized how Bitcoin can empower them. The predictable issuance of new Bitcoin keeps being triggered every 10 minutes on average as another block is mined, irrespective of the level of understanding people may or may not have about the monetary network. With more than 90% of the Bitcoin supply already issued, scarcity is even more evident now. Although issuance doesn't determine liquidity, as already issued coins can and often are traded on the market, the truth is most of the circulating Bitcoin supply is held by entities with little or no history of selling. A report from December 2020 by data analytics firm Glassnode tried to gauge and shed some light on the liquidity of the Bitcoin supply. It analyzed Bitcoin entities and classified them into 3 liquidity categories: highly liquid, liquid, and illiquid. How Bitcoin solves the payments bureaucracy. Few people understand international payment networks. That quickly undermines a favorite FUD accusation levied against Bitcoin. Well, they understand the legacy system even less, but rely on it nonetheless. 3/4 of Brits think they own the funds in their bank accounts. 68% of Austrian respondents think that bank deposits and cash are backed by gold. Some 4 out of 7 Americans are considered financially illiterate in simple tests that usually involve calculating basic interest or understanding what inflation does to your purchasing power. They imagine SWIFT, the messaging network that banks use internationally to validate funds in correspondence accounts, working a bit like postcards or maybe emails. You press send or pay for a stamp on the postcard before you put it in the mailbox, and the email service or mailman carry the package to its receiver. Banking hasn't worked that way for centuries, if ever. Instead, banks clear liabilities against one another. Internationally, they hold accounts with each other and ensure global transactions by crediting or debiting their accounts while confirming the action through SWIFT. Money, as we think of it, the number you see in your account on the banking app, usually isn't even money. It is debt claims against the banks. Banks, in turn, hold master accounts with the country's central bank where, through clearing of respective liabilities, settlement transactions between banks take place. Since nobody gets this, we shouldn't be surprised that they don't see how Bitcoin is different. Bitcoin operates on an entirely different promise, one of assets instead of debts. Bitcoin is a monetary commodity without counterparty risk. It's a trackable and verifiable bearer asset that doesn't correspond to a liability elsewhere in the system. It is said that gold is the only financial asset that isn't someone else's liability. Sent across the world or across the living room, Bitcoin does operate like the email or mailman model we keep in our heads. It is backed by something other than a government's word, the network effect of uses and energy expended in its production. It is not somebody else's debt. A Bitcoinized world wouldn't necessarily solve my recent bureaucracy problems. At least not as long as we still have large governments, high taxes, and individuals and companies that dutifully report their activities. In that world, I'd still receive the value of what I produced, less whatever my government overlords deem their share, but to a Lightning Network channel or on-chain address instead. That changes nothing. As a monetary technology, Bitcoin doesn't solve these institutional, economic, and social problems. What we need is the accompanying ethos of Bitcoin, of taking responsibility for oneself, of independence, of extreme reluctance to having others pillage what is yours. We need a radically new approach to how we do things, where outdated hierarchies and organizational functions are out. Independence, responsibility, and self-sufficiency are in. What we need, in other words, is for Bitcoin to usher in a society where we don't rely on taxes and money printing as the method for saving for the future, for ensuring our access to services, or the upkeep of various infrastructures. We need the ethos of Bitcoiners much more than the tech, money, or investment itself. At Savvy Finance, we believe we are still very early in this space, and there is no better opportunity than right now to dump in and buy the dips. Thanks for watching. Till our next video, stay savvy.